If you look at what's happening in, let's say, Russia versus Ukraine, just to give you a sense of very broad numbers, first is that Russia is a very important global economy, a very important global power, and you have seen that over a period of last 30 years, it has become even more important, right? Because what we have seen is that Russian oil exports and gas exports are very, very large. So Russia exports almost second or third largest crude oil, uh, about 10.5 million barrels per day. It generally hovers between second and third largest. And top one, two, three are now US, Saudi Arabia, and Russia. It is also the second largest gas producer in the world. Produces nearly 600 billion cubic feet of gas per day. Again, very, very large numbers. Uh, Over a period of time, Russia has gained significant, traction. And what we have seen is, in terms of numbers, it supplies nearly 40% of all gas that Eurozone imports. So it's a very, very strategic ally in that sense, in terms of energy ally for Eurozone. So if you look at the overall mix of energy that Eurozone gets, almost 40% comes from Russia. Um, and out of this 40%, nearly 20% flows through Ukraine. So almost 20 to 25% gas flows through pipelines in Ukraine. And there has been a long standing debate between Russia and Ukraine. So just थोड़ा history में आपको बताता हूँ कि between 1650 to today, Ukraine has not been an independent nation per se, apart from the period between 1991 to now. So historically, ethnically, and historically, these two nations have been always been together. जब USSR था, they had their different prime ministers who reported to the federation. But still, these countries were like brothers. If you read the history, that's what they call each other. But post the 1991 split, Ukraine became a very large, and you would have read जो Russian President Putin has been saying कि यूक्रेन को बहुत सारी टेरिटरी मिल गई है जो उसको नहीं मिलनी चाहिए थी. सो दैट हैज बीन अ की प्रॉब्लम एरिया. लेकिन कुछ इंपॉर्टेंट हिस्टोरिकल माइलस्टोन्स हैं जो मैं बताऊंगा बिफोर वी टॉक मोर ग्रैनुलरली अबाउट व्हाट इज द कनेक्शन. पहला तो 1994 में यूक्रेन गेव अप ऑल इट्स न्यूक्लियर आर्सेनल. दे हैड अबाउट 2000 वॉरहेड्स, न्यूक्लियर वॉरहेड्स. दे गेव अप in return, where Russia, Eurozone, UK, US said that कि यूक्रेन की सोवरेनिटी बनी रहेगी, they will not challenge it or it will not be altered, right? When Russian president, who's Putin right now, he became the premier or the head of the state in Russia, उसके तुरंत बाद ही there was a big oil crash. Closer to 1999, Putin came into the scene. Oil prices are not doing really well at that point. So country could not really do much. And after 2003-4, what we have seen is prices started to go up, and unke revenue also started to flow in. Right? They made a lot of money, but at that time, Russian oil industry was not doing very well. They were just recovering and doing all the important things they were up to. So in reality, they got a big boost to their revenues only when oil prices again hit $100 a barrel in 2010-11. तो 4 साल का एक पीरियड है 2010, 11, 12, 13, 14 जहाँ पे oil prices were above $100. Their industry was also doing very well because they had a huge help from Western oil companies. For example, in 2014, Exxon was on the verge of providing a very large scale a shale oil facility to Russia, which eventually it could not because 2014 में Russia annexed Crimea from Ukraine, and because of that उसके ऊपर sanctions लग गए थे. So I will come to that later. But essentially, under Putin, Russia has become very strong only in the last 4 to 5 years. और उसमें से भी 2019 के बाद, that means 2020 में, because of COVID crisis, their oil revenue had shrunk massively, right? So if you look at the last 20-25 years, at this time, when you look at what they have done over the last 20 years, they had always harbored this ambition that the USSR in its original state should come back to some extent. And to do that, they had to become financially very strong and geopolitically very strong. and they were under a lot of sanctions, so वो हो नहीं पा रहा था. So I think ideally they started preparing for this maybe closer to 2017-18, जहाँ पे उन्होंने they removed their FX reserves from dollar and went to gold and other currencies to a very large extent, created new long-term contracts with China and other nations to supply gas. So in 2018, China did a 30-year contract with Russia. They did another 30-year contract with Russia recently, right? I think just about 30 days ago, right? So they are trying to diversify where they sell. Eventually, what is the overall conflict? So if you look at Ukraine and Russia, there are two regions in Ukraine which are very, very important, right? And if you go back to 2014, what Russia did is they went and annexed one major part of a region called Crimea, and they took it under them. And the point was, they said that Crimea has always been part of the Russian Federation, and the local people also want to be part of Russia. So they did a voting there, a referendum sort of, which eventually turned out to be in favor of Russia with 96% voting, and Crimea became part of Russia. And with that, US imposed, and all other Eurozone countries imposed very harsh sanctions on Russia, right? But they did not sanction Russian oil and gas to a very large extent. It continued to flow for many, many years. So that allowed Russia to build a very, very large war chest. So just to give you a few numbers, Russian economy is about $1.7 trillion or $1.8 trillion today. In comparison, India is $3 trillion, let's say. And Ukraine is about $280-300 billion, not very large. So Russian economy, Russia holds nearly $650 billion in FX reserve today. When you convert whatever they hold in gold and in dollar, the value is 650 billion, which is very large. So you can, India also holds very similar FX reserve with nearly double the economy. So you can imagine the extent of backup they have. They did not have this backup in 2014. Secondly, post the sanctions were imposed, Russia was forced to create its own agriculture economy. So they became almost self-independent in wheat, pulses, and other areas. They used to import a lot of them earlier, most of them from Ukraine, right? And third part, as I told you earlier, a lot of oil flowed through Ukraine, the Russian oil and gas, and Russia had to pay royalty to Ukraine, and it was a big issue. There have been a lot of fights historically, and they have reached some deals also historically where Russia paid handsome sums to Ukraine whenever there was a president which was in favor of Russia, right? This has happened over the last 20 years. So to counter this, what Russia did is they created two pipelines, Nord Stream 1 and Nord Stream 2, to bypass gas flowing from Ukraine to Eurozone, because Eurozone is the largest customer. Russian economy, nearly 65% of all revenues comes from gas and oil, right? And it is the largest source of revenue for Russia. And so these two pipelines became extremely important, and they have done many other strategic alliances. For example, they found gas in the Arctic, and they created a new route called Northern Arctic Route, supplying gas from the eastern part of Russia to China. And even Japan is now buying that gas. No other country in the world has been able to go to -50, -60 degrees Celsius and -40 degrees Celsius, and get that gas out. Russia has been able to do it, right? So they've created and diversified over the last 8 years. What they have today is two situations. First, when we talk about numbers, they have very strong FX reserve. Second, they are mostly not very dependent on other countries to run their economy as of today. Third, politically, they don't have much to lose because they are not part of any global strategic alliance per se. And plus, they also have a soft ally in terms of China. Although China is strategically placed, it will not put all its eggs in one basket. So generally, it is very defensive about partnering with Russia whole hog. But still, I think it has been able to provide a cushion for Russia to, go over sanctions. So in terms of finances, I think Russia is well placed to endure a war. And of course, there will be a huge damage to the Russian economy once more sanctions are imposed. But I think they have become a little more immune to sanctions than they were 8 years ago. Second part is what they want from Ukraine. So there are two very important regions in Ukraine. So if you look at the eastern flank of Ukraine, there are two regions called Donetsk and Luhansk. Both these regions have rebel controlled areas. In 2014, they had become rebel controlled. They did not become today. And those areas are controlled by rebels who are Russian sympathizers. They have already declared that they are independent. This has not happened today. This has been happening since 2014. And the papers that they have declared, they have said that the whole region is with them, not only the areas which they control, but the whole province or region, what you call, is in their favor. And they declare themselves as independent republic, not even Russian or Ukrainian, right? And now Russia is trying to identify them and make them independent nations per se, or it wants to annex it like Crimea. It's not very well known. We'll come to know it in the future. If that happens, Ukraine possibly will lose part of that area. As of today, what we are hearing in the news is that Russia has also gone ahead and it is trying to capture the Ukrainian capital Kyiv. And it's not very sure, as you know, in these circumstances, news becomes very, very volatile. But as of today, things stand. Two things to note. One is that this has become an escalated, threat, and the threat is because all the parties which are involved. At one side there is Russia. On the other side with Ukraine there is NATO, North American Treaty, and the NATO has huge amount of nuclear capability. It's 30 nations are involved or part of NATO, and all these nations have said that changing international borders will not be a very important or the right move on Russian counterpart. So NATO, particularly if you look at the member states, they have already said that they will use all sorts of financial sanctions, to deter Russia. As of now, we haven't seen any military action from NATO. The only threat is that if this escalates to another level where NATO gets involved militarily, it will become a very big problem. As of now, I think it has moved in that direction, but it hasn't become, because as of now, US and Eurozone are still talking about financial sanctions. How far they go is questionable, or in terms of impacting Russia. The second aspect, of course, is the impact on oil and gas. So you would have seen after the, as I said, North Atlantic Treaty Organization or NATO, it has threatened that it will have military action against Russia. The oil prices have spiked. Today, I think oil is up nearly 10%, closer to $105 mark. Anyway, which contract you look at, 102 or 104 and 5. So very, very large uptick in oil prices, which are already quite, higher because of supply side issues which are happening in many other countries. So this is one of the most important factor globally. Other than this, I think, other than oil and gas, Russia does not have very strong financial linkages across the world. So this is a very, very important point to note. Oil and gas remains one of the biggest bargaining chips for Russia. And if you talk about supply, as I said, the total oil demand per day is about 101 million barrels per day. As of now, what BP statistical survey is saying, or even EIA is saying, that it has reached back to 101 million barrel per day. Out of that, roughly, if you look at, OPEC supplies about 28, 29, although it can supply 32. It is supplying about 28.5 million barrels per day. The rest of it is supplied by non-OPEC members. In non-OPEC members, there are two large members. One is US and one is Russia. The US supplies about 11.8 million barrels per day, the top producer in the world. Then you have, within the OPEC, you have Saudi Arabia supplying closer to 10.5 or 10.8 million barrels per day today. And then comes Russia, which is supplying another 10.5 million barrels per day. So Russia has a very large presence, supplying nearly 10% of global oil. It keeps on hovering in second and third place. If there is a supply side problem, that means if let's say Russian oil were to go off the market, it will not go off the market completely in one shot. That number is what is moving the market in terms of oil market. Let's say if Russian supplies were to fall by, let's say, 3 or 4 million barrels per day, who will fill that gap? 3 to 4 million barrels is a very, very large number. For oil market, even 500,000 barrels is a very large number, right? Uh, Before I take questions, one important part on the other side, I will also answer questions on Indian economy and other important aspects that we'll cover. There is also a deal happening on the other side with Iran, which is the Iran nuclear deal. Iran can produce around 4.5 million barrels of oil per day within the next 6 months. Their facilities are ready. Um it also has about 70, 80 million barrels floating in storage as of today. So if it is given a deal, that oil can flow very quickly across the world, right? So it could supply maybe 8 to 10 days of oil demand, which is a very, very large number, right? So Iranian nuclear deal becomes a very crucial factor as we speak today in terms of the energy market. Second important aspect, if you look at the energy futures, there is a very, very steep backwardation. That means if you look at the current price of oil, that is April 22 contract for Brent crude. Let's say it is trading at about $104. The 6 months contract, that is the October contract, is trading at $93. So almost a $11 premium is what the spot prices are trading at. This is the highest premium on Brent in the last 40 years, which means that oil markets are already discounting a very large hit to oil supplies because of the war. And historically, we've seen that these kind of spreads generally do not last unless and until the conflicts move to the, let's say, the next degree. So when nuclear powers enter into conflicts, there are only two ways to it. Since the World War II, we haven't seen any conflict rise to the level of becoming a nuclear conflict. They generally died down before that, whether because of diplomacy or because of other reasons or because of sanctions. We haven't seen that get escalated. So if that happens, there is no analysis which can help us in terms of how things pan out. But historically, we have seen that nuclear deterrent is very strong, and these conflicts die down once sanctions or diplomacy works out. But they can be long drawn out as well, right? So if it doesn't go to the next level, what oil markets are telling us is they are already very tight, and they are pricing in these two scenarios. That means Russian oil going off the market to some extent. That will depend on what kind of sanctions do the US and Eurozone impose on Russia. The other part is Iran also coming into the picture. Many of these things are interrelated to each other because there is a whole belt coming from, let's say, Yemen to rebels controlled Iraq, and then there is Iran, then there is Lebanon, and then there is Afghanistan. And you go in this direction, you find that all this full belt is in accordance with what Russia is doing. So it's not a one-off event. It's a strategy that axis of resistance, so to speak, what is called in Middle East, has been developing over a period of time. And I think the solution will lie somewhere closer to a compromise between Russia and US in terms of sanctions. And probably, once Russia gains an upper hand in terms of controlling these regions, which I think it has done today, and secondly, Iran getting a nuclear deal, I think both of these events most likely should happen within 10 or 15 days of each other. And that, I think, should be the resolution over time. Two takeaways key before I take questions. First is that this is an event which does not taper. It expands over a period of time. So it's very, very important to see how these conflicts play out. Very important to see how oil markets move. The premium which I spoke about, which is called backwardation. If that backwardation starts to narrow down, that means generally the market is starting to expect a resolution in this whole episode. And second thing is that these conflicts resolve very quickly if there is a very large diplomacy, right? So that we have to see over time. Now I think I'll take questions. Probably we can talk about what is the impact of oil on Indian economy. how does India come into picture and why our markets are falling. Usha, if do you have any questions, I'm happy to take that. Otherwise, I'll start with the Indian part.
Yes, Sahil, I do have
Yeah.
a question. A
Yeah.
couple of questions actually, and then
Sure.
we are also getting a few on the chat box. So the
Sure.
first question is, what role do you think West could do quickly? I mean, if you could make a
Yeah.
reference to that. Yeah. And
Sure.
what is the role that, primarily United States had played so far?
So primarily what I see is that they haven't really played a conciliatory role as of now. And it seems that they are still trying to use sanctions as a major tool. And we've seen over time sanctions lose its teeth over a time, and Russia has played that card very, very well. My expectation is that they will deploy sanctions on Russian banks, which they are talking about now, which could probably route the oil and gas trade. So a very, very fine balance has to be created where, as of today, there are certain Russian banks which can still operate under sanctions. So I think if those sanctions are imposed, there is a possibility that Russia will back down because Russian revenues come only from oil and gas. And second important point is that, as per news reports, I'm not a expert on this, but Vladimir Putin is suffering from some kind of a disease, Alzheimer's or other, and it does appear that he is a strong man. He's not going to back down very easily. So the demands most likely could be about sanctions, about Russia getting a more mainstream role, and secondly annexing these two areas. I think it will give it more bargaining power in terms of how to approach Ukraine. Third point, what I feel is that most likely it will not overtake Ukraine because it has learned its lesson in Afghanistan last time. It's not very easy, and we all have the lessons from Syria, Iraq. US has learned that lesson. It's not very easy to annex a country and establish a land of rule. A law there. It's very, very difficult. So most countries now take a backseat in trying to take over the entire country. It's very tough. It's not easy, right? So even in case of Russia, I don't think that possibility will arise. My expectation is that we'll see some kind of sanity coming back in the next 1 week or 10 days.
The next question, Sahil, is on primarily on commodities, and then more
Sure.
reference to gold, because
Right.
it's always a item or a asset class that we speak a lot in such situations
Right.
from historic times. So that is the question.
Sure. So in terms of commodities, I'll tell you that very, very important is oil. As I told you that the demand and supply balance is very important because Russia is a very, very large producer. Ukraine is not a very large producer in terms of how it behaves because a lot of gas flows through Ukraine, but its own production has been not very high. In Central Asia, the largest producer has been Kazakhstan, and that remains a very, very strong partner for China, and I think that continues to remain so. So I'm not very sure X of Russia what impact it will have. Russia itself is a very, very important oil and gas player globally. So for commodities, I think it's bullish for oil until it lasts. Once it is over, I think it will probably be like a dead weight on oil prices, and they will come tumbling down by 2025 dollars. I think that is the premium that oil prices have built over where it should be right now. Second, for other commodities, at the margins, if you look at it, is demand destructive because all geopolitical tensions generally boil down to impacting sentimental demand. So apart from aluminium, which is a very important commodity from Russia, Russia is one of the largest producers. Also, it is very energy intensive. Apart from aluminium, I see that this conflict overall is negative for most other base metals. It will not be very helpful for base metal prices per se. Especially when it is over, I think demand slowdown in other parts of the country will bite them a lot more. And third part is gold. Gold, as you know, has not moved much over the last 2 years, apart from the rally that we have had in 2020 and first month of 21. Since then, it hasn't really moved. Now it is at a new 52-week high. My assumption is that gold prices are most likely to see renewed buying. There are 2-3 things happening. One is that jewelry demand already was picking up from all countries, specifically India and China. Second, we've already seen huge amount of debt creation in the global economy. So all those factors continue to remain as such. Third, the most important factor, gold prices perform very well when other asset classes are not. There is a full video that I've done on this. You can watch it. And that factor, I think, is helping gold to a very large extent now. And fourth and foremost, which is, I think, a new driver for many countries which are not in accordance with, Western geopolitical frame of reference, gold acts as a very large economic hedge. And Russia has shown that to a very large extent, right? Russia has most of its forex reserve in gold, and that is why he's been able to counter and come to the negotiating table. For any country holding reserves in euro or in dollars, it is not even a matter of a few hours that they have to bow down to Western pressure, because their economy will be shut. They will not be able to buy anything from international markets. If they are dependent on energy for other countries, and the whole economy shuts down within a few hours, right? So it's not very easy to fight sanctions unless and until you are self-sufficient in energy and financially you have a gold backing. So I think many other central banks will try and up their gold reserves over the next few years, which will add to more demand for gold. And lastly, our own models show that gold prices on a model basis should be closer to about 23 to 2400 by the end of this year or middle of next year. So I think gold prices has a lot of levers to move up, and they have, in accordance with what is happening globally, it has shown momentum now. So I think it continues to remain positive. Yeah.
Sahil, we have quite a lot of questions on the Indian
Sure.
market.
Yeah.
What will be the shock? I'm just combining a few questions that have come
Please.
because quite a few have repeated also.
Yeah.
The impact on the markets for the short and the long term, and most importantly, what should, as an advisor, we be advising the clients, and what kind of products to look at. So this is a couple of questions that have come
Sure.
in different formats. I'm combining and asking you.
Sure. So first thing is to understand how does it impact India. I think that is one of the most important question. The most obvious impact, of course, is from the energy sector. India imports almost 85% of its oil requirements. So to give you numbers which probably you should remember, India imports roughly about 290 million tons of oil every year. Okay, and this is the FY20 number, because I'm not including the COVID year number, because it was an aberration. So almost 290 million tons of oil that we import every year. And if you look at the oil price, let's say if oil is trading at $100, let's assume that is the number. We are going to import oil worth of about 2.15 or 215 billion dollars. $215 billion का import करेंगे हम एक साल में. If oil is at 100, we are importing 290 million tons of oil. That is the amount of oil we'll import. We'll also export about 75 to 80 billion dollars. That is our petroleum exports. We refine petrol and export it. So net we'll end up having a oil trade deficit of about 140 billion dollars. So 140 billion dollars ka trade deficit is a large number. Last time, if you remember, in FY13, when we had huge trouble on rupee and other issues, we ran a deficit of about $100 billion. Okay, about $100 billion. और उस समय हमारी इकोनॉमी का साइज वाज अराउंड $1.8 ट्रिलियन. तो अब ये अगर आप कंपैरिजन देखोगे, टुडे इंडियन इकोनॉमी इज क्लोजर टू $3 ट्रिलियन. ओके, and in FY23, that is the next year, it will be around 3.3 or 3.4 trillion dollars. उसके ऊपर अगर आप ये 140 billion dollars का नंबर देखोगे, जो कि काफी बड़ा नंबर है, the number will come closer to about 4% or so, right? 4% of GDP, 4.2% of GDP. Last time जब हमारे पास ये ऑयल का प्रॉब्लम हुआ था 140, तब ये नंबर तकरीबन 5.5% of GDP चला गया था. और जब ऑयल ऊपर जा रहा था, and when we were having projections, the projections were even higher, right? So as of today, I think when we look at oil, if it remains at $100, doesn't jump a lot, we will be able to scrape through. There will be certain issues, but at 95, I think we'll be comfortable. At 100, we'll have some issues, small issues. But I think over and above this price, let's say every $10 rise in oil from here will add about $15-16 billion to India's trade deficit, oil trade deficit, right? Which will become very large now. अगर आप ये large कैसे होगा, I will tell you the numbers. India का जो overall deficit है, उसमें से ऑयल अगर 120 या 140 हो जाता है, जो नंबर मैंने आपको बताया अभी, मर्चेंडाइज ट्रेड डेफिसिट विच इज नॉन ऑयल, दैट मीन्स जो हम बाकी चीजें इंपोर्ट करते हैं जैसे इंजीनियरिंग गुड्स, सेल फोन्स एटसेट्रा, ऑल दैट इज अबाउट $100 बिलियन। तो इन दोनों नंबर को ऐड कर दोगे तो $240 बिलियन का डेफिसिट इंडिया पे आ जाएगा। सो इंडिया हैज टू पे $240 बिलियन इन इंपोर्ट्स। दिस इज एक्सपोर्ट माइनस इंपोर्ट, ओनली मर्चेंडाइज। इसमें अगर आप हमारे सर्विसेज एक्सपोर्ट्स जोड़ दोगे, विच इज वी आर इन सरप्लस राइट नाउ, द रन रेट इज अबाउट 10 बिलियन अ मंथ, तो $120 बिलियन वहां पे माइनस कर दीजिए आप, राइट। सो 240 में से 120 अगर आप हटा देंगे तो 120 बचता है। 120 में आप और $80 बिलियन रेमिटेंसेज ऐड कीजिए, जो प्राइवेट ट्रांसफर बाहर से लोग इंडियंस जो हैं वापिस इंडिया पैसा भेजते हैं, तो 40 बिलियन का डेफिसिट बचता है। और ये 40 बिलियन के डेफिसिट में आप और एक प्राइमरी रॉयल्टी इनकम जो हम बाहर पे करते हैं वो $38 बिलियन ऐड कीजिए, तो रफली 75 बिलियन के आसपास का डेफिसिट हो जाता है करंट अकाउंट डेफिसिट। सो करंट अकाउंट डेफिसिट ऑफ $75 बिलियन इज अ लार्ज नंबर, right? That number can get offset by two, three very large number. One is FDI. We get about $45 billion in FDI. तो $45 बिलियन अगर FDI में आता है, और अगर FI तकरीबन $10 बिलियन भी पंप इन करते हैं इंडिया के अंदर, तो ये नंबर तकरीबन 50 to 55 बिलियन हो जाता है। दिस इज FY23 नंबर्स। और तकरीबन 15 से 20 बिलियन हमें अदर कैपिटल में आ जाता है, जैसे एक्सटर्नल कमर्शियल बोरोइंग या बैंक लोन्स। तो नेट आई थिंक इस नंबर पे हम लोग कंफर्टेबल है। अब ये नंबर को अगर आप, ये बाकी सारे नंबर्स ऑयल को छोड़ के स्टेडी हैं, दे डोंट मूव अ लॉट, यू नो, दे जनरली मूव बाय 5 to 10 बिलियन अप और डाउन, बट ऑयल मूव्स बिकॉज इट इज लिंक्ड टू द प्राइस। सो लेट्स अज्यूम दैट इफ ऑयल गोज फ्रॉम 100 to 150, तो हमारा टोटल बिल फॉर ऑयल ट्रेड डेफिसिट विल गो अप बाय $75 बिलियन रफली, इवन मोर, बिकॉज इट्स नॉट अ स्ट्रेट लीनियर इक्वेशन। That $75 billion we will not have to pay. You know, that will become a problem for India. So it's a very simple equation. If you see oil prices moving up, let's say beyond $110 billion, we'll have issues to pay, dollars. That will cause rupee to weaken. That will cause inflation to go up. Again, every $10 rise in crude oil prices, it adds almost 1% to our wholesale prices, or about 60 to 70 basis points to our consumer, CPI, depending on where we are roughly. So that will again become a problem. But as of now, it does appear that oil prices will be ranged. Where they are right now seems to be a very significant hurdle depending on where demand and supply is. But it's very important to watch these, events to know कि ये कहाँ पे जाएगा. So net, this is the most important linkage. India के पास buffer क्या है? We have about $640 billion in FX reserve, a good strong number. Secondly, our monetary policy is still loose. It's not tight. RBI still has the room to either tighten the policy if there is a run, or secondly, it continues to support the growth path of the economy. Third part is, maybe it's a line which is not very clear, is the fiscal policy. Right now, our fiscal deficit is high because of we are coming out of COVID year. So if we have this whole problem of, let's say, oil going to 150, it will become a problem. If it doesn't go, I don't think it is a very large problem. If it remains where it is right now, I think we'll be okay between $100, $105 for a while. It will not be a problem. So how do you look at the markets in light of what I spoke about oil? First, very important point, इंडियन इकोनॉमी पे अभी भी मॉनेटरी एंड फिस्कल पॉलिसी इज वेरी इजी. वी आर नॉट इन लेट साइकिल वेयर देयर इज अ मॉनेटरी टाइटनिंग हैपनिंग, और देयर इज अ वेरी लार्ज फिस्कल नेगेटिव इम्पल्स, दैट मीन्स सरकार खर्चा कम कर रही हो. ये दोनों चीजें नहीं हो रही हैं. सो द अंडरलाइंग spark in the economy from monetary and fiscal policy is still supportive. It's not. So this external event is not in our control because it is completely fueled by what is happening globally. When you look at domestically, these are still factors which work in favor of Indian economy. Second important factor, rates are normalizing across the world. अभी Fed rate hike भी आने वाला है मार्च के अंदर. So if rate hikes happen, our valuation premium will shrink. तो अगर आपने देखा होगा लास्ट 2-3 महीने से we have been speaking that India's valuation premium is a little higher. It has to come down versus peer also, versus history also, and we've seen that premium is now shrinking, right? So we think that that whole scenario will play out for a while. Premium will continue to shrink. As of today, Nifty is now trading at about 19 times FY23 numbers. FY23 का Nifty EPS is about 850 or 860, depending on which projections you believe in. FY22 पे we will end at about 750 or 745. And in FY23, we are going to do 14 to 15% growth. Estimates are even as high as 25% growth. But let's assume that we do 13-14% growth. उस पे Nifty is trading at about 19 times 1 year forward earnings. This is one of the lowest levels since pandemic, or even pre-pandemic इतना नीचे Nifty कभी trade नहीं हुआ है. So it has started to trade closer to averages. Long term average काफी नीचे है, तकरीबन 17.5-18 के पास है. And that is because at that time rates were higher. So अगर आप adjusted for rates देखोगे, I think once Nifty hits closer to or lower 16,000 या नीचे जाती है उसके, it will come to very very average valuation. So जो froth है ऊपर से Nifty के valuation का, वो सब clear हो जाएगा. That will not be there, which that means जो pricey nature of stocks था, it will go away. So that is very important to remember that this event has removed the froth which was there in the Indian markets. वो काफी सारे sectors में था वो. This event has removed it. Even when the underlying factors have not changed. That means the monetary policy continues to remain supportive, and the fiscal policy also continues to remain supportive. Maybe Usha, if I want to talk about sectors, I'll talk here only. So two things which are very important. One is I think some defensive will do well, as you would have seen today. I think healthcare, pharma is a sector where underlying financials have improved quite a bit in the last 2 to 3 years, although stock prices have not moved so much. So overall, the representation of pharma in the headline indices at about 3.5-4%, although it should be higher than 10%, basis how much profits they make and basis how much representation pharma has globally. Third point, they act like defenses when there is a war-like scenario or geopolitical tensions. So I think pharma is a good place to hide, healthcare and pharma. It will probably do well. That is one area which I think stands out very clearly. Second area which I want to pinpoint and give you some numbers. Small caps haven't really done well in India over the last 20 years. The CAGR is less than 10% now. दूसरा important point, if you go back to 2018 rally in small caps, they were rallying like anything. At that point, the total market cap of BSE small cap 250 index was $200 billion at the peak. $200 billion. उस समय इंडियन इकोनॉमी का साइज 2.6-2.7 ट्रिलियन था. तो तकरीबन 7-8% स्मॉल कैप का वेट था एज अ परसेंटेज ऑफ जीडीपी. Today, Indian economy is going to be about 3.1 trillion in FY22, and the market cap of that index is still $200 billion, right? So there is, and if you look at Indian market cap per se, on the whole, it has moved up from 2.5 trillion to 3.2 trillion today. I am accounting for the fall today, otherwise it would have been even higher. So 30% up move in overall market cap. Small cap market cap is back to the same level. So my sense is that mid and small cap, there was a huge performance premium, valuation premium. It has got washed off. So अगर आप निफ्टी लेवल्स के साथ देखोगे तो sacrosanct levels देखोगे. Once Nifty goes to average valuation, let's say 16,000 or lower, basis where we are today, mid and small cap I think will become a very attractive proposition. So small cap per se I think is an area that we should look at very very carefully. So healthcare, then small cap. Third point I think very importantly is sectors which are not linked to global economy. जैसे Indian capex cycle है, infra है, engineering है. I think they continue to remain in a good sweet spot. इसमें एक additional benefit क्या हो रहा है because of all these tensions, जो भी monetary tightening या normalization हम सोच रहे थे होगी, maybe it will also get pushed off for a little bit longer, right? And that will mean that these very very India focused sectors can do well. So I think that capex, engineering, pharma again is a sector that you should look at very closely. How to tackle this volatility in market? I think it is always good to look at rule based funds, particularly the category of dynamic asset allocation, because it continues to allocate according to what is happening in valuations and other factors. So मेरे ख्याल से that remains a very solid strategy, particularly if you are not able to go through the volatility. So I think that remains a very important bet to make. Other than that, the segment Usha already spoke about is the international segment. Nasdaq and semiconductors are now trading at levels very close to pre-pandemic levels in terms of valuation. अंडरलाइंग स्टॉक्स की जो अर्निंग ग्रोथ है अभी भी 14-15% है. और अगर आप 5 साल का व्यू लेते हो, irrespective what is happening in commodity stocks etc., this theme is going to deliver a lot of strong earning growth. So I think वहां पे if you get more cuts in US, and US is shielded from all these activities, right? वो ऑयल प्रोड्यूसर है बड़ा, बहुत बड़ा, तो it benefits from oil or higher oil prices. Geographically उसका कुछ लेना देना नहीं है इससे. It is not involved to a very large extent. So if it doesn't go to the next level, as I said, and the correction is deeper, I think it's again an opportunity to look at these international funds. So Usha, any other question? Next question.
Yeah, there is. So just to summarize the the fund or the concepts that you spoke, Sahil, from a thematic perspective, there is defensive play through healthcare, and a little more global immune fund through the DSP Tiger, or the capex cycle, which we play through DSP Tiger fund. So those two are something, and obviously the market correction is always an advantage. On the international side, there are huge opportunities available through the correction, which has started a couple of months back itself, even way before this the geopolitical risk started. So that is something that DSP Global Innovation Fund, and interestingly we encourage extensively participation through the SIP route, so that helps. The Evergreen DSP Dynamic Asset Allocation Fund, which is rule based, and therefore it automatically rebalances, increases the equity allocation when the opportunities arise. And the most important takeaway for the benefit of the audience is the valuation froth that has sort of come off. Whole of 2021, while there was a large equity flow into the markets, there was always a large set of distributors who also worried about the froth in the market. And there are investors who are sitting on sidelines, a lot of money getting parked into arbitrage and fixed income products, so that at opportunities like this, now whatever is the reason, something has triggered a correction in the market and your Nifty valuations have come off. So obviously a good opportunity to participate. Coming to another interesting question, Sahil, which you made a reference to, if the monetary tightening could get a little more easier. So there is an interesting question that would the Fed think on those lines? Is there a likelihood of Fed thinking on those lines?
See, Fed meeting is still maybe 1 or 2 weeks away, and if this conflict settles down, I still expect them to hike by 25 basis points and quantitative easing. They don't require it anymore. But I don't think or read that the Fed is too hawkish. I think the media and financial press is even more hawkish than the Fed. They are going to go slow. I don't see any reason for Fed to go very, very fast. For example, I will tell you that in US, there was a very large kicker to demand and inflation because of the stimulus that they have given. So just to give you 1 or 2 numbers, your total US का disposable personal income है total at a economy level, वो crisis शुरू होने से पहले $16.5 trillion था. Then Fed gave, and of course the US government gave very, very strong stimulus. It went to about $21 trillion. And now it is back to about $19 trillion. And I think it is just about 200 to $350 billion higher than where it should be if you just extrapolate the pre-COVID trends. So मेरे ख्याल से वो जो extra stimulus का delta है, that is going away from the economy. My expectation is that 2022 में US economy will slow down in comparison to what it was in 2021, right? So it will give Fed some room to slow it down in terms of their rate hikes or their hawkish stance. I think they will do measured rate hikes by 25 basis points or so. If the this whole scenario, geopolitical situation escalates, there is a possibility that Fed might want to see it through maybe for a meeting or so, right? But if history is any guide, there are 2 types of conflict. One is that they become long drawn out guerrilla warfares. They go on for years. What has been going on in many parts of the world, and they become insignificant, right? The other is that they end very, very quickly. I think this one probably the large part of the conflict will end quickly, one way or the other. And I don't think Fed will get derailed in terms of what it is going to do. But if you look at pure, let's say, timelines of tightening, you could maybe add 1 or 2 months. That it'll probably be slower than what it was, let's say, expected to be last week or 10 days ago. So it's fair to say that the path to normalization will be a little slower than it was earlier.
Sahil, you covered a lot on the commodities and the equity markets per se. While we did make a reference to fiscal and the monetary stance, there is a question which is on what on the debt side should one consider, especially in an inflationary environment.
So on the debt side, what we see is that the biggest risk, as I said, comes from what happens with energy prices, because India is a very, very large net energy importer. And because of that, our global linkages are very strong. So in case you see that, let's say, oil goes up another 10% tomorrow, it will be a risk. So if oil goes to $120 and there is no end in sight, that the conflict continues to escalate, it will have a problem on rupee, it will have a problem on interest rates, because then RBI will be forced to defend the rupee, right? Then it becomes a vicious cycle on defending the rupee or raising rates. What should you do? So that generally becomes a bit of a crisis fighting situation. But I think RBI has ammunition; it has tools to fight that kind of situation, but not for a very long time. So let's say if oil were to remain at $130-$140 for 6 months, our growth will slow down. For sure, there is no doubt about it. But if it is a transitory scenario of, let's say, oil hovering at $100 plus for 1 month or so and then coming back down, I don't think it will be a very big problem. From a fixed income perspective, there are two aspects. First is that when there is risk off globally, generally you see that developed markets see their bond yields go down. People rush towards bond, the safety of US Treasury. Dollar also strengthens, gold also goes up. That is the first knee-jerk reaction that we see globally, which happens. So right now you're seeing dollar is also strong, gold is also strong, US bonds are also strong because US yields are going down, right? But for emerging markets, generally the repercussions are ulta, right? Because there is an outflow. And what we are already seeing from Indian equity markets, FPI have been selling incessantly for last many days, right? So all these aspects are linked. If you look at it very closely, geopolitical situation, oil, then outflow from India, all of them have a genesis, and then the valuation premium. All of them have a genesis, somewhere or the other. They are all linked to each other, right? One breaks, the other will also slow down. That is the idea. If they do not, then it will present some kind of trouble for India. My expectation is that yields will continue to, see some capping around the recent highs of 695 to 7%. They will find it difficult to reach that level per se if oil continues to be here. We have seen a very large part of FI selling. There is no way to estimate whether more will come or not, but I think from historical trend perspective, maybe the largest portion of FI selling is already behind us. Plus, once you reach average valuations on equity outflow generally slim down. They don't keep on selling a lot more. So that will also not have very strong currency repercussions. So on interest rates, I think yields on the 10-year basis will get capped around the previous levels. Short term will continue to remain low because they are still controlled by RBI unless and until RBI expects to move higher. So I think our yield curve will probably see some amount of bear steepening, but that's about it. No significant changes there.
Sahil, a couple of questions on the World Energy Fund. So maybe the participants have missed the point that today you don't invest in that, and the underlying construct is also more not traditional, and it is green energy. But you may probably give a reference to the Natural Resources and Energy Fund, which is more domestic in nature, and enable the investors to participate in the energy sector. So there are questions on the energy side. Yeah.
Sure. So when you look at energy, the World Energy Fund is now primarily investing in the sustainable part because we feel that over the next 10 years, we will see a tipping point where accelerated investment will go to that sector and earnings will rise in that sector. And that's the long-term strategy for that fund. To play the conventional energy, we feel that for oil and gas particularly, NRNE is more suited. Uh, Not going into long discussion, but what we see is that uh, currently the biggest source of global energy, ex of India and China, is oil. Oil is at number one position. Then comes gas, and then comes coal. You know, India and China consume the highest amount of coal as of today. Slowly and steadily, what will happen is gas will become number one, oil will become number two. It is also gas related geopolitical tensions which is hovering across the world. So many of conventional companies will become gas and oil. Many of these companies are also trying to become players in wind and hydro and other renewable sources, right? So eventually the industry will shift. Maybe it will shift by 2025, 27. Because of COVID, the expectation was that the shifting has, gone ahead. It has got delayed by 2 years. But what oil prices are doing today is again shifting a lot of focus towards renewables, right? So I think it will accelerate that trend even more. So very clear cut two dimensions. If you want to play the new energy, the sustainable part, go to the World Energy Fund. If you want to play the conventional oil and gas sector, go to the NRNE fund, which is more directed towards oil and gas. It also buys international companies which are in the oil and gas space. Yeah, I hope I'm clear with that.
Sahil, there is a question on allocation. If you had 100 rupees to allocate in the current situation, given the Indian and the global market, how would your allocation be from a 3-year perspective?
So from a 3-year perspective, being a very conservative investor, I generally do not go beyond 70% equity, or in the last few years I've only gone to 90-100% equity only in March 2020. I haven't gone there. So if you start from there, not being very aggressive, I think right now I will try to go towards 45-50% allocation to equity. If it falls more, maybe increase it. Again, you have to keep in mind the kind of top allocation that I'm talking about. Maybe just a few days ago or few weeks ago, my allocation was very, very low. So I think incrementally adding to equity is what is most logical. Second, bringing in reference of what has happened historically. So if you go back, let's say, towards conflicts in Afghanistan, which was to a lesser degree, although it also became a global theater, if you remember, just a few months ago. Or go to the Kargil war, or to other conflicts which have happened, war on terror, if you remember, Iraq, all these references. Many of them involved countries which were directly nuclear power. For example, what happened in Syria, US and Russia were head to head there as well. Very similar situation, not so similar, but very similar. Even in those situations, you have seen market becoming very jittery. But the point is, what is the starting point of the market? So, for example, if equity markets are trading at 15 times 1 year forward multiple, and there is a geopolitical event or a conflict, markets will maybe become a little bit jittery, but then they will ignore it and go ahead because valuations are justified. But when the same conflict happens, when markets are trading at 22 times, you will see an accelerated reaction. That is what is happening today, right? So once you go back to average valuations, I think timing these conflicts will become immaterial. How I approach it is that I maybe constitute a accelerated weekly SIP in the strategies which we spoke about, or in the fund that you see most ideally suited to what you do. And I think as the market falls, you accumulate those units. It is very difficult to time it, or very difficult to know what will happen geopolitically. So an accelerated SIP, taking your equity exposure higher as the market falls, I think is the most ideal scenario to play these events.
Sure, Sahil. I think we largely come to the end of the questions, primarily on markets, on commodities, on gold, inflationary environment, and a lot of references. There is one set of questions that we probably didn't take up, which I will ask you now. China and the impact through that, because they are also someone who's been in some form an ally to Russian exports. So there are a couple of questions.
So China per se is a very, very independent kind of nation right now. They haven't really supported Russia or gone against them, because it is in their interest to cultivate a second power circle globally, and that is what is getting aligned. Russia and China getting aligned to one side, and it is becoming a bipolar world, to say the least. But historically, or as per my understanding, and I'm not an expert in this, China has not really been very great friends with Russia ever in the last 1,000 years. And if you go and read about Mao Zedong, he has never spoken positively about Russia. So China being so close to Russia over a very long period of time hasn't been a very great trading partner for them. Apart from the last 10 years, they have started to integrate some of their markets together, specifically on energy. Just to give you two numbers, in 1993, China consumed less than a million barrels of oil a day. I think about 300,000 barrels or so. And today it is the second largest consumer of crude oil globally, right? Its own production is 4.5 million barrels a day. I think it is the fifth largest producer of crude oil today. But its consumption has gone beyond 12 million or 15 million barrels a day. It's possibly going to eclipse US in the next 10 to 15 years. So to have energy security, China has to diversify its resources. It cannot rely only on Russia, because Russia cannot fulfill all its requirements. It relies on US. It buys huge amount of LNG from US, very very large sums. And second, I don't want to sound alarmist, but there is the conflict, ready to happen in the South China Sea, in the Malacca Strait, and China is very well aware about that. So it is creating what we call the Belt Road Initiative to circumvent what's happening with Ukraine today. So it does not want to get cornered. My expectation is that China will not take sides. It is not in their favor to take sides, whether with Russia or with the West, and they will probably remain silent as they did during the Middle Eastern crisis. In terms of getting impacted because of higher oil prices, I think it will, but not to a very large extent, because China still continues to depend on coal to a very large extent for its energy needs. It is also accelerating its use of natural gas, and also it is importing a lot of gas from other Middle Eastern countries, and oil from other Middle Eastern countries. So the growth will get impacted in terms of inflation getting impacted, but energy as a percentage of Chinese GDP, energy usage, is much smaller than it is for India, right? So overall, there that impact is much smaller. Plus, don't forget that China is a very large net exporter. So even if it has to pay some more dollars to buy oil, it does not impact its balance of payment or terms of trade. So it can very well take higher oil prices very easily. Yeah.
Thanks, Sahil. So maybe we can have a quick, summary from you. I
Sure.
largely come to the end of the questions, and just before handing over to you to that, uh, all the participants, we have another session with Atul Bhole, who manages a couple of our large and well-known equity and hybrid funds. FlexiCap is one of the flagship funds. It is actually 25 years in existence. This is the 25th year of the fund. We launched it in 1997. We did a good plan in the name of Old Fund Offer sometime last year in August and September. Many of you have participated. Atul also manages our equity and bond fund and dynamic asset allocation fund, the equity portion of these two hybrid category funds. We have kept a session with Atul so that you have more questions on the style in which he manages the fund and his outlook on some of his stocks for the year, as well as a part of the crisis that is unfolding. So do join us. We'll share the invite links again once more. And Sahil, request you to just summarize a few takeaways.
Sure. So one or two very important key takeaways. First is that historically conflicts have not been very bad over the long term, although they play out through different means. But equity markets, digest them very quickly over a period of time. Second is that we had a very frothy kind of valuations in many parts of the market that is getting washed off, which is a good thing for us. India is still looking at a 3 to 5 year growth cycle ahead of us. It is still not behind us, it is ahead of us. So I think in that terms we are well placed. Third, these conflicts generally do not scale up. That is what we've seen at least in the 21st century. If it doesn't, it will probably die down, and the base case remains that oil plus minus $100, plus minus 10% $100. It hovers in this range, and India will be able to scrape through the whole thing. Fourth point, up your equity allocation as the valuations go down, probably using accelerated methods. And beyond 16,000, 15,800, I think the timing factor will not play a very large role. It will not be very easy to time where the market is. Third, as I said, themes which could do well, healthcare, small caps, mid caps. I think very, very important to look at these segments. Healthcare from a defensive perspective, using DAF kind of a strategy, to allocate on a rule-based idea. And from international perspective, I spoke about, GIF kind of plays where you play innovation as a theme. In debt funds, you continue to remain in funds like savings, which doesn't get impacted with interest rate movement too much up or down. So I think this summarizes the overall picture. My sense is that there is no reason to panic per se, although the news and the flow around what we are hearing is very negative and very distressing. Even the market prices are very distressing. But I think it's more an opportunity when you look at it from a 5-year perspective. And if you can take the volatility through more systematic and rule-based investing, I think this will be the ideal or the most important ideal time after the COVID crash of 20 that you will be able to allocate more to equity. So I think with this, I'm done. Thank you for joining.
Yeah. Thank you everyone for joining, and we hope to see you again tomorrow. Thank you very much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.